All right. We can finally start doing some analysis here. I'm going to look at UiPath for this video. This stock came up recently. It used to trade, I think, around the 13 to 14 range, and then it shot up to 18. And then after the government shut down the stock and the tariff woes, once again, the stock dipped back down a bit. So I'm curious to see what we can unfortunately, I got to figure out a way to share multiple screens, but I'm going to switch over to PIKR terminal, which is something I use when I do stock analysis. Sometimes I use Python, maybe AlphaVantage if I'm trying to download financial data. But so if I switch over there, you can see the stock performance that I was talking about recently. It's trading in the 10s and the 11s, shot up to 18 on October 9th. And I'm having a hot tea while I do this, so I'm gonna take some tea breaks in between all this. But 18 highs of 18.5 came back down a little bit to 15. Now it's trading 16. So potentially a new bull run for the stock. Very sideways for the past year to date, trading between 13 and minimum of 10. We could even go a year back, 3 years. It's basically been where it's always has, um, between 12 and $25. So let's jump into the financials, see if there's anything interesting. At least on the top line revenue, we're seeing very consistent numbers. 607 in 2021, 1.4 billion in 2025. And then what's even more interesting is if you map the market cap on this guy, we're seeing like a lift situation where the stock market cap started off really high, 35 billion. Is that 35 billion? What are the units in millions? So we had 35 billion market cap, and then it's degraded all the way down to 7.8. Even though top line revenue is going up, the fundamental, at least on the top line, is going up, while the stock price continues downward, and in the past 2 years has actually been sideways. So, as a value investor, fundamental analysis investor, this is a good opportunity to ask, is this a value play given the circumstances have gotten a lot better? So, this is personally what I do in my financial journey. Personally, I would look at the market cap because that's your price. And I want to ask the first question. Are the fundamentals getting better? And if so, that's great. We want to invest in high quality companies that are growing. And then the opportunity comes in when this divergence happens. we're seeing overall great revenue growth, but the stock is down and sideways. So typically, when I do my own analysis, I would, it's a lot of copy and pasting actually. And ideally, I'd have a way to automate this process. But let's go back into Excel and then, I want the dates of my data so I know what I'm looking at. Toggle back over to TIKR terminal and I want to get the revenue data. That's one of the stocks or that's one of the data points that I'm interested in. So if we do that, toggle back to Excel, I'm just going to say revenue, and then we got our revenue. I'm also going to get market cap data. So here's market cap. Go back. Looks like the stock wasn't public back in 2021, so the data that we have actually starts in 2022. So now that we have revenue and market cap, we can actually calculate the price to sales of this stock, the annual price to sales of UiPath. So if I took the market cap, divided it by the revenue, that's our sales, we get 21 in 2022. And notice how steep the price to sales ratio drops for UiPath because we saw that market cap figure decline from 19 billion all the way down to 7.8 billion. We can also calculate the average price to sales. Let's I want to $sign that, and I just messed it up. There you go. So if I drag that out, we're seeing that it's at 11. UiPath right now, relative to itself, its historic self, is actually trading twice as less as it does on average. So then the next question is, from a value perspective, is this a good entry point to start investing in UiPath? And we could make a little chart to get a better understanding of this stock. So path, annual, price to sales. Typically, when the blue line, our annual price to sales, is lower than the average historic price to sales, that means the stock, in this case Path, is trading cheaper on a revenue basis relative to itself. So that's one check mark. UiPath is actually a negative EBITDA company, and its basic EPS has actually been negative as well. So it'd be difficult to calculate EBITDA, EBITDA, and those traditional metrics. So, what other metrics could we calculate given that it's a negative net income EBITDA, EBITDA company? We could look at their cash flow statement. So, let me toggle back. We can see if they have positive free cash flow, and they do. It makes it kind of complicated because they're negative. It'd be difficult. It'd be difficult to calculate the price to free cash flow of a company that's negative. However, we still see this divergence in the top line and now the free cash flow fundamentals against the market cap. Back in around 2021, UiPath was only making 27 million in free cash flow, and that's for the whole year. And investors were pumping the price up to 35 billion total market cap. But now UiPath is actually making 305 million free cash flow. So if we were to do a little math, so we're saying that 305, divide that by 27, so 11 times more in free cash flow annually. In the most recent year, UiPath generated 11 times more in free cash flow that year compared to 2021. However, the market cap is down from 35 billion to 7.8 billion, right? So free cash flow goes up 11 times, but the market cap goes down. What is that? 90%? 35. 35 minus 7. Nope, I'm an idiot. 7 divided by 35 divided by 35. So 80%. The stock is down 80% in the past 4 years when free cash flow is up 11x, 11 times. So that's another interesting perspective where you have the top line figure revenues up, market cap is down. You have the bottom figure, free cash flow. Free cash flow is also up tremendously the past 2 years. 2024, you had 291 million in free cash flow. You had 305 the previous quarter or the previous year, and yet the stock is down 80%. And UiPath is in this automation business. They're in the core of what makes AI possible: automation of business practices, automation of data, all things that AI needs. So one could argue that UiPath is in a neat position to be in during this AI cycle, AI powered economy. Since we are on this page, I will go ahead and copy over our free cash flow figures. So let's go back to the Excel file. So I'm just going to say free cash flow. Then I could calculate the price to free cash flow. So let's say, and it was not public yet, so we're going to jump to 2022 and say market cap divided by the free cash flow. That's negative 300. Take the average price to free cash flow. So yeah, negative 120. So it's harder to interpret this ratio. It's a lot easier when it's positive. Uh, but even here, this is a good example, right? Last year alone, the price to free cash flow was at 44. Now, for the most recent year, the price to free cash flow is now at 25. So even here, we see the price to free cash flow in just 1 year decline from 44 to 25. Make math simple, call it, um, 35%, right? So what does that mean? I'm curious what the UiPath market cap is now that the stock has actually gone up a little bit. Um, Cap 8.65 billion. So 8.65 billion, right? So that's today. So I'm just gonna say today, right? And then, we could just drag that out, and we could drag that out, drag that value. So 28 price to free cash flow given the previous annual free cash flow, and using today's market cap, we see that the price to free cash flow using today's market cap is 28, well below 2024's price to free cash flow of 44. Even for the price to sales multiple, last year it was 9.9. Now we're at 6. 2022, it was even higher at 21 when they were making less money. So when they were making only 892 million in revenue, the price to sales was 21. Today we trade at 6. The free cash flow is actually negative. So investors were actually willing to pay money for negative free cash flow earned, causing price to free cash flow to be negative 300. But now the free cash flow is positive at 305 million, but only trades at 28 price to free cash flow when last year it was 44. So these are discounted prices. And the next proper question to ask is this an appropriate discount on UiPath stock? Let's get um, let's get some news. Um, See if you guys can see that. Nope. All right. I got news pulled up, but I'm having trouble sharing the screen on that. So I'll read it out loud instead. Just trying to see if there's any. There is some interesting new. Motley Fool, UiPath CEO, chairman sells 123K shares for 2.3 million. So, could be a red flag if you're seeing insider trading activity. Okay, so here you go. So earlier in the video, I mentioned how UiPath can play this AI economy right, given that they are an automation business. They can integrate AI into their automation models. So here it says from UiPath Agentic Automation, UiPath simplifies agentic automation with voice agents with Google's Gemini models, which Google is another stock that I've made a video on, and that video is up around 50% since that video first came out. Right. They seem to be working on text-based interactions with AI agents, uh, and they work well for tasks that demand precision, such as analyzing complex data sets, refining documents, communications, but it can also be challenging when applied to spontaneous conversations. So they're using voice interaction to provide cues and subtle communication nuances that you might not be able to hard code. AI agents can leverage voice communication to enhance their effectiveness in handling unpredictable and open ended tasks. UiPath is available on Google Cloud Marketplace, so that's good, right? Their products are available in popular third-party cloud providers like Google. Let's look at their most recent financial statements. There you go. All right, so here's UiPath's website, and do they have, where's investor relations? There you go. Let's look at their most recent quarter release earnings. Yes, please. So for second quarter, this seems to be the most recent results. The revenue was up 360 or 362 million, increase of 14% year over year. And AAR of 1.7 billion, increase 11%. Let's look up. Or actually, let's look up AAR um, definition for UiPath. And they don't have it. Maybe if I keep reading, it'll actually tell me what it is, right? AAR. Annualized renewal run rate. Okay. Is a key performance metric in managing our business. Illustrates the capacity to acquire new subscription customers and to maintain those relationships. That makes sense to me. Okay. So that's good news, right? 11%, that means they're getting better at retaining the customers that they do get and then keeping them. Cash flow from operations reaches 42 million. So once again, they're now a positive cash flow company, unlike previously. And I just clicked something. They got a lot of partners. Okay. Revenue 362 million. Renewal rate 1.7 billion, increase 11%. New retention rate of 108%. Dollar based. So if it's dollar based, that must mean they upgraded. Maybe they had the basic plan and then some people jumped to the premium version. That's why you're able to surpass 100%. Net cash flow operations of 42 million positive. Pretty good cash position of 1.5 billion. See, now I'm curious to look at their balance sheet. So let's jump back. And yep, I don't think it's going to let me show. Hmm, there you go. Okay. So total cash and short-term investments looks pretty good, especially after 2021. I'm curious how they got that huge cash position there. Probably, I wouldn't be surprised if it's like some diluting, but I'm just making an assumption there. So let's look at their liabilities as well. So total current liabilities doesn't look like they have any long-term debt. I'm not seeing long-term debt, so I'm just gonna click total liabilities. And you know, that's what I like to see. So we saw a path from a top line perspective. How much revenue are they making? Is revenue going up? But the stock cap, market cap is going down. We looked at the bottom of how much free cash flow are they bringing in. They're bringing in 300 million. It's up 11x. Stock's down 80% at the same time. And now you also have a positive balance sheet where you're seeing more total cash and short-term investments compared to their current and total liabilities. So that's good news. I didn't see long-term debt line item on the balance sheet, so majority of their liabilities are current state. If they really wanted to, they could refinance it, especially now that rates have dropped a little bit. The cash position trend is on the negative side. We're going from 1.8 billion down to 1.6 billion from 2022 to 2025. Liabilities are slowly growing from 527 in the current state up to 798 in 2025 for the current liabilities. Same type of trend going on for total liabilities. So, in terms of the trend, a little bit of caution there. However, more cash on the balance sheet compared to their liabilities, which is a good position. And even with this improved balance sheet statement, we had the stock down 80%. So, another perspective from the value investing lens. So, now that we reviewed the balance sheet, let's go back into their second quarter filing. So, they have collaborations with Deloitte. And that's the other thing, too, right? If you're an automation company, you're an AI automation company, and you're like, hey, I can improve your business. And the company, the buyer is saying, yep, we want your flow to be part of our business. UiPath is in a good position as long as they maintain their relationships and keep their promise. But once your business, especially the flow and the operations of it, is tethered to an outside vendor, it's going to be very hard to break that flow and go with somebody else. There's a lot of friction built in once the path is made. Think of it like, if you built a website using AWS, it's going to be hard to, pull the plug and then jump to, Google Cloud, for instance. It's possible, but that's going to be a lot of upfront effort for the business. And, they got to weigh the pros and cons. Is it really worth spending the money, writing up the code, changing the directory? You got to, the business has to figure that out. So once UiPath is able to embed itself into a business's processes, UiPath can then also cross sell and say, hey, we're in this, we're in this path, we're in this flow of yours. Why not branch us out? So UiPath I can see why that retention rate, renewal rate can be so high. Anything else fun in here? Commentary, anything like that? Let's look at the presentation. That'd be fun. So yeah, they have a good foundation for the AI economy, right? What does AI need? It needs data. It needs access to APIs because APIs can then get the data. They have AI trust and context and models that they can provide to their buyers, especially for businesses that don't know how to code. They can interact with AI in a different way. And I mentioned this about Amazon too, but agents and robotics, um, one of the stocks I'm personally focusing on in my own financial journey is Amazon because, one day you're going to have agents delivering Amazon packages. You already have robots sorting boxes in Amazon warehouses today. One day you're going to have autonomous Amazon vans, and then you're going to have a humanoid robot come out, deliver your package to the front door, and then get back in the van and do it all over again. And from the value perspective, Amazon's in a great position to benefit from the AI economy that we are in from both perspectives, the AWS side and through their distribution, logistics, and warehouse division. From both angles, they can benefit tremendously. And UiPath could too. I mean, personally, my own financial journey, Amazon has been a big focus for me. So this, to me personally, this kind of looks like Microsoft Automate, actually. Kind of like you have all these boxes and you can tell the boxes like what to do. And I might actually look it up. Yeah, so if I were to switch over, yeah, it's not going to let me do that. Yeah, so here you go. So this is very similar, I think. Power Automate from Microsoft. It allows you to build processes. Curious if they could give me like an example use cases. Streamline processes. Looks very similar. Okay. So this one's interesting. Coding agents. This kind of makes me think it's like a skin. Um, so again, it's like they use open source foundations. They use Llama, and I'm assuming they skin it and then they package it within their UiPath integration, so customers don't have to leave the UiPath ecosystem. They still have humans touch points just for safety, so that can help build trust. Data modeling, this is your machine learning and AI models right there. And at least from a high glance, UiPath has large partners. And going back to, if you're part of someone's process, that's a friction point for the business owner, whether they realize it or not, because it's going to make it very difficult to pivot to somebody else because you need that business process turned on 24/7, 365. And I mean, what is this? Annual run rate, renewal run rate. Very predictable path from 1.2 to 1.7 billion quarter one 2024 to 2026 quarter two. Very clear, very straightforward path, very predictable. And sometimes those are the stocks that you want to invest in. Is their performance reliable? Is their performance predictable? And at least from this chart, it looks like it. You can also argue that Maybe you don't want to invest in a company that relies too heavily on CapEx, right? Because, you know, once it starts getting tough again and it goes a little bit south, automation and AI, those might be the first things businesses cut from the budget. If you're going to scale up your business and automate your processes, get some agents in there, AI agents in there, that's going to require a lot of CapEx. And if the market goes south, you're not going to have a lot of CapEx, meaning UiPath is not going to be seeing a lot of revenue, right? But again, if you're part of a process of a business's process, it's going to be very hard to chunk out UiPath and build it yourself, right? So you could look at it both ways. They're seeing customers increase, automation becoming C-suite priority. So that can show, hey, UiPath is sticky. Once it's with a vendor, it's sticky, right? So yeah, let's go back to the Excel spreadsheet, and at least from a annual perspective, is UiPath trading at a discount? Historically to itself, yes. I would say UiPath is trading at a discount. The current stock price of UI is $16.28. I think there's potential for it to climb up either to 19 or $20 a share. I'd like to do some more analysis on it, see if there's any new partnerships UiPath is making, if there's any new directions that the company's going into. I think I'd like to look into that just to solidify the analysis here. But from a high level fundamental analysis standpoint, your price to revenue is at a discount, your price to free cash flow historic to itself is at a discount. A good next step to do is see, hey, let's get a basket of AI automation companies, calculate their price to sales, their price to free cash flow, and then calculate the overall average of the AI automation basket and say, is UiPath trading at a discount compared to peers? And then I think that would help solidify whether or not UiPath is trading at a discount compared to intrinsic value. We can say, hey, relative to itself historically, UiPath is now trading at a discount, and UiPath is trading at a discount compared to competitors. Is the market ignoring UiPath when it shouldn't? And might we have a lift opportunity? So, hope you guys enjoyed the live stream. Let me know if there's any stocks you'd like to see covered on the channel or in live. Current plan is to make a UiPath video. I'll probably make a stock analysis video. That way, you don't have to watch the entire live stream, and you can, people can just get the good stuff, right? Um, but yeah, off the top of my head, I want to analyze UiPath a bit more. I want to look at Salesforce. That stock has been down, I think, 20% year to date, but the fundamentals seem to be on the up and up, so I'm curious about that. There's some other stocks that I have written down. Unfortunately, it's just hard to get to all of them and do proper analysis, so I'm trying to not rush through it. But yeah, hope you guys enjoyed this video. Some high level fundamental analysis techniques, and I'll see you all in the next one.